Okay, I think we're live. I think we're going, right? Hopefully you can hear me. And I'll share my screen, and hopefully you can share you'll be able to see my screen. I think looks like I'm sharing this screen. So you should be looking at a screen of FinViz right now. If you are not, please tell me. Chat it in. Let me get okay. All right. Thanks, Marlon, for letting me know. Move things around a little bit here. All right. 3 stocks which could make big moves. I'm going to tell you what those stocks are, or well, first 2 anyway, and I'll show you the third one in a second. I'm going to explain to you why I think these are the stocks. Guess Incorporated. I don't know if you remember Guess Jeans. Well, yeah, they're still around, but I don't think they do other stuff. But they're a retail company. They've really dipped down low, but they could make an explosive move back up sometime in the next couple of weeks. Why? Because they are primed for a short squeeze. Now, short squeeze is what GameStop did last year, right? And that's the epic short squeeze of all short squeezes. I mean, before that, it was Volkswagen. This company is not poised for that strong of a short squeeze. They are poised for the kind of thing where earnings come out, they're surprisingly good, and all the people who are short have to quickly abandon their idea, and that drives the price up fast, maybe 20, maybe 30, 40% higher than where it was. So that's the kind of move I'm talking about. Because they are about to release earnings, I believe, in a short period of time. Let's make sure about what their earnings date is here. Hang on. Yeah, they're going to release earnings this week. Wednesday, it looks like. That could be a big catalyst that could turn things around and could spark the short squeeze. So that's the first one. How did I figure that out? Well, I used FinViz as a screener, and I just looked at float short over 20%, average volume over 500K, earnings date in the next 5 days, beta over 1, price over $4. And these are the only 2 stocks that come up with those characteristics. Now, if you look across this table, you also see that the float short is 21%. What does that mean? Well, if you're unfamiliar with this term, float short, float is the available shares to trade. That's just all of the shares that are out there in the market owned by whoever are available to, if somebody wanted to sell them, if somebody wanted to buy them, they could be traded, right? It's kind of like the liquidity pool, everything that's possible. Why that's important is if you have something that is a small pool and all of a sudden a comparatively big move within that pool happens, then, even though it's not going to make huge waves throughout the rest of the market, within the shares that are being traded there, it can really move prices fast, unusually fast. This happens when you have a large percentage of the pool of the available float that is short. They're holding short sell positions, and what that means is they start by selling. It's like if you're doing a forex trade, you sell one currency against another, and then the opposite is that you buy one currency against another, right? You're always long one currency and short the other currency, right? Well, the other currency in this case is the US dollar. All stocks are priced in US dollars. Well, if you start off by selling the shares, the broker allows you to just instantly borrow and and sell them. So it works just like a forex trade. You are now positioned so that if that stock goes down, you profit. That's what short selling is. So if a large percentage of all of the people available to trade are short, well, what does it mean? It means a lot of people think the company is going to fail. But if they change their mind instantaneously, if all of a sudden something comes along and they say, "Whoa, this company's not going to fail. I don't have this real easy trade," then they have to get out of their position. And if they get out of their position, a short sell position, the way they do it is to do the opposite of how they got in. They got in by instituting a sell order. Now they have to institute a buy order to get out. If at the same time somebody comes along and says, "Hey, this company might be better than I thought," and they want to issue a buy order, right? So you've got these people trying to get in and these people trying to get out, and they're both doing the same thing. They're both making buy orders. And what does that do? That pushes the stock up faster. If one of those situations happens on a stock that has a low float, but is somehow trading a larger degree of volume, again, that can make prices really move fast. So that's why we're looking for these kinds of stocks. Now, it doesn't always happen. Oftentimes, there's a reason these stocks are going down and that they're heavily shorted and so forth. What has to happen is that news has to come out that changes people's mind. But if it does, then all of the characteristics for a big trade are there. It's like there's a bunch of fuel, big old haystack here, just waiting for a spark. Spark might not show up, but if it does, kapow. So we got the big old haystack here. That's what we're looking at with Guess Jeans, GES, or Guess Inc., I should say. There's one more characteristic on this list here that you need to understand about. The float is only 38 million shares. The average volume is almost 1 million shares. Okay, so it's like between 2 and 3%, almost 3% of the float is getting traded every day normally. There are so many people short. 21% of the float is short, so that's going to be about 6 million shares short. That if they all wanted to get out all at one time, it would take 8 days for them to get out at the normal trading volume. If in fact they were all to want to get out on the same day, then that would mean that they would take 8 times the normal volume. And notice what that would mean. That would mean, 8 times a million, that'd be 8 million shares, right? You'd be looking at, 20% of the float. Is that right? 8, 20. Yeah, about 20% of the float. No, that's not right. Why can't I get this straight in my head? 40 million shares and 8. Yeah, no, that's 20%, because of course that's what the float short is. Sorry about that little math problem there. That would mean that 20% of the people were all trying to get out. 20% of the available float all wanted out, 8 times the normal volume. So either it takes several days for them to get out, in which case it pushes prices up for several days, or they all go up in one big whoosh. And again, it's evidence that this is explosive. So the short ratio, the higher it is, the better. You really want to see a short float above 20% and a short ratio above 10. So it's not quite a 10, it's 8.48, but it's pretty good. So that's the first one, GES. The second one is SRG. Let's look at these charts here. GES, and this is the anchored VWAP, by the way. I don't have time to explain what that indicator is or how it works. Just these are standard deviations, and what we've got here is 4 standard deviations of the VWAP, of the anchored multi-day VWAP. And look what happened when it pushed way past that bottom line. It started, rebounding up. It's gone down, and now it's going back up. In other words, higher low, right? So this establishes the fact that we've got buyers between 18 and 16. If I have buyers then it's really easy for me to say, I'm going to jump in here, wherever I am right there. And it doesn't have to be a perfect spot. And I'm going to set my stop loss below the low right there. And so that's where I'm going to try and establish the trade. Okay. And then, yeah, that's, well, let me just make that a little thicker so it's different from these other lines. Okay. So I'm getting in here-ish, or just wherever. The precise amount does not matter. And then I'm getting out down there. And then I'm going to take half of that distance and say I want to get at least that much of a profit. So if I'm in at 1810 and I'm out at 1585, that's 220. Then I want to be in, or I want to be able to take profit somewhere around say 1910, 1920, something like that. We'll call it 1915. That would be where my profit target is. And that's it. That's the trade setup. Now, I don't have to take profit right there. I could let it run. What I would really hope is that on the day of earnings, it gaps way up into here and then just keeps going, right? But basically anything above that green line, anything up there, I'm willing to take, right? Okay. Let's see. If you do have a question, just type it right into the chat and I will see it. Just responding back to Derek's test. It worked. Okay. So that's GES. All right. Now that you know what I'm looking for, now that you know how I'm setting up the trade, let's take the next one. SRG is a better situation in that this float is smaller. The float short is also over 20, but the short ratio is almost 12 days. It's already trading. I mean, the average volume is at 613, and as of, well, about 10 minutes ago when I captured that, it already had 80,000 shares traded. Let me rerun that search and see where we are. We're at 115. Okay, so SRG, Seritage Growth Properties. This looks like a REIT. Now, I would not expect a real estate investment trust, a REIT, to have explosive moves. Thing is, this one already has. It started at 9, it went up to 12 and is back to 11, right? Just in that look. That might be that the short squeeze already took place and is done. Let's see if SRG is, yeah, see, I'm not sure why the catalyst took off here, but earnings are tomorrow. And so this is a really big opportunity, because if in fact this is all about somebody knows something, right? Then this thing could probably continue on significantly higher at a minimum, back up to its old highs. And we're talking about from 11 to 14 and a half, that's 30% move, right? So, and if it goes any more than that, well, this thing has been up here just within the past 6 months. So I think that there's real opportunity here, even though this is just a REIT. Its price is mobile. A lot of REITs, they just kind of putter up and down, and they pay out a big dividend, and then because that's what they do, they just real estate. Others, because they're structured differently, or because their business model is differently, or whatever, right? Well, in this case, this thing's moving around, so it probably is worth considering. What's the trade setup? This, as we kind of looked at before, the stop. The question is, would you put the stop right there? Technically speaking, technical analysis speaking, that is probably the best place to put it, because what that means is if the price comes back down and starts digging into the gap that occurred a few days ago, then whatever enthusiasm there is for the upward trend is gone. And it's not that that's going to make you a good trade. It's going to get you out of the trade at the first possible sign of the excitement is over. So you'd make a loss. The thing is, if it didn't do that, if it never made it down there, then the excitement is still there, which means price could go up strongly, right? I find, however, that where we're talking about 2 or 3 weeks in front of an earnings announcement, um, that whatever caused the gap, it has probably dissipated. So the big opportunity here that might yet come probably needs a little bit more space. So I'm going to bring the stop loss clear down to this line down here, and we'll just set that as the red right on that VWAP line. That makes a lot, well, actually right below would make even more sense, because that'll be support among other things. So we would get in somewhere around where the price is, and then we would stop down there. That's in at 11, stopped at 9, which means anything above 12 would be fine for taking the profit. Of course, after earnings, what we would hope is that we'd get this big gap that would take us up well past 12, and we just wait until we saw it sort of top out and take it. As long as we're above 12, we're great. That's it. That's the trade setup. Why do I set up this risk 2 to make 1? Well, because that gives me a 66% chance of winning. And that assumes that prices are random, right? That isn't because this trade is smart. It's because just price movement is random. But if in fact I trade this way over and over and over again, I win 2 out of 3 times. Now, it doesn't mean that I'm making money if every time I lose, I'm losing double the amount, right? That's just break even. If I have good ideas and I win just about 4 or 5% of the time more, 70, 71% of the time, then I'm doing great. And if I have these explosive trades in my portfolio that every now and again jump a lot faster, a lot farther than the, target price that I have in mind, then I've got 2 ways of making an edge. One, trying to make the winning percentage just a little bit better because I'm picking good signals. And 2, because I've got explosive trades that can pay out bigger than what my expectation is. And I find that those 2 things together really do give a trader an edge if you are consistently trading them in this way. And so I stick to this risk 2 to make 1. If you've ever taken, any of my classes and stuff, you've heard me talk about the way of the wolf, or the African trading. I mean, the hunting dog, African hunting dog, same thing. This is the idea that you have a pack of predators who work together, and they have a high percentage, high win rate. So here we are, we're talking about this thing together, and we're looking at risk 2 to make 1, and that gives us the high percentage. Anyway, that's all. All right, now let's go find number 3. We only have 2 on this search that are set up for today because they're, they have earnings. We're going to take away the earnings date, and that shows that we have 29 stocks to choose from. Which one? Well, I'm going to look at gaps, either gap up or gap down. First, I'm going to start with a gap down, and we'll say down at least 2%. Do any of them have a gap down 2%? Well, turns out some do. Let's have a look. Wayfair, Vertex, CPE, Fubo. That's funny to me. And then this one, KLXZ. How are we doing over here on the float short? Which one has the highest short ratio? The top one, W, Wayfair. Okay, this is kind of crazy. I'm going to come back to this one. Wayfarers, of all the 5 there, that looks like the one to consider. Let me try the gap up thing, though. Whoops. Are any of these gapping up? I'm going to go 2%. None of them are gapping up today. Okay. So then that leaves us with Wayfair. Now what I'm searching for here is gap behavior, because gaps turn out to be some actually very useful signals. This is based on the technical analysis, Journal of Technical Analysis report that was published about 10 years ago, but I've been trading on this stuff ever since, and it seems to hold out. There's a very small edge. It's not like every trade that gaps goes fantastically, but statistically speaking, you are working with a better pool of stocks. Most of the time I do gap up trades. However, there is this weird case where if you get enough of a gap down and you have this short interest all at the same time, then you have a real possibility of having a fast rebound. I don't know if Wayfair is actually going to qualify for this. Let me take you through it real quick. We had earnings, and you see what happened there? It gapped down, and then it came right back up really fast. Okay, this gap is hardly anything. That's like, that doesn't account for much. What we're looking for is a gap that pushes below 2 standard deviations on this anchored VWAP, or 2 standard or 2, well, I should say 3 ATRs from a 20-day moving average. So if you had Keltner channels, you could see that. But the point is, or Bollinger Bands, it's like anything that pushes down so far that it's unusual, and then it kind of comes back, it starts coming back up. If it gaps way down, that it's pushing below 3 ATRs or below 3 standard deviation Bollinger Bands, or in this case, 2 standard deviation anchored VWAP. If you have any of those things, then if it's pushed way down and it starts coming back up, when it comes back up, it could come back up fast. I don't think Wayfair is there yet. However, if Wayfair were to get down below 105, I think that's a trigger point, and that you could watch for that. So let's go back to the stock screener, because I told you 3 stocks that could have a big move. And I'm talking about right now, not in the future. We don't have any gaps. Let me take off the beta. And this gives us 69 stocks. So I'm going to look here at anything that is breaking out of a new 20-day high right now. And there's only one of these. This might be worth looking at. Let's have a quick look. Okay, so we just had earnings. We've already had this big move up. And let's go back and look at the stats that brought us this thing. So the float is only 3 million shares. 31% of that float is short. Now this data lags. Notice the short ratio is not even a full day, because the average volume is 1 million, and the float is only 3 million. It's like trading a third of its total float every day. If all of a sudden there were 3 million shares to be traded, then they would, if 3 million shares traded in a day, they would be trading through the float all in a single day. That kind of explosiveness, that kind of heavy trading can make for very explosive price moves. That's what I'm trying to say. So this is probably a stock that is just a powder keg. Again, look how it gets way down here, and then it pops up at some point because of that volume. That volume was 30 million shares. That's hard to imagine, but 30 million shares, that means the float is trading through 10 times. And so it went from 15 to 23. And then, of course, it's up to 34. After all of this, it still hasn't gone down, and we're actually pushing back up to that old high. Earnings have already come through, and they were positive news. The news was we didn't lose as much money as we thought, and even though we didn't make any sales. That's pretty wild. I don't know what this stock's all about, but I mean, look at that. It's on an upward trend, and then all of a sudden it started. Well, Sierra Oncology. It's clearly a cancer drug of some kind that's behind all this. But the breakout here, that sort of thing, and that that small float, there just aren't that many shares. There are only 13 million outstanding. There's only 3 million available to trade. Insiders don't own very much, which means institutions may, well, no, right here, institutional is 58%. It's kind of a low number for a company that is well established. So there's a lot of room for institutions to want to dive in and jump in on this stock. Yeah, I say that's a powder keg. And so SRRA is probably worth looking at. And how would that trade go? Same thing. I want to do risk 2 to make 1. There's my entry. There's my stop. I'm in at around 32, almost 33. I'm out at around 28. That's $5. So therefore, 250 higher. Anything above 40 and a half. No. 32, 32, 33. Anything above 35 and a half to 36, somewhere in there. Anything above there would be fine for a profit-taking target. And those are the 3 trades setups. So hopefully that was of use to you. GES, SRG, and SRRA. Caleb asks, what indicators using in TradingView? Is it many moving average lines? No. Sorry, these lines that I'm doing here, if you go into TradingView and you search on, it's called Anchored VWAP. And let me check which one it is. Anchored VWAP with the standard deviations. Looking for, yeah. So what you do is you search on Anchored VWAP. There it is, and standard deviations. Rumpy Pumpy something or other is the person who did it. There's some other ones. STD band, standard deviation, VMA. That definitely is not the one I'm using. I'm thinking it's this one right here. Let's see how it comes in. Yeah, that looks like that's the one. Although that one has a couple of other items to it. So maybe not. Anyway, so that's the indicator. Searching for those lines are volume weighted average price anchored on a given day, and you can move that anchor to wherever you want. I move it back to the beginning of the year or 90 days back or something like that. All right, everybody. Appreciate your attendance here and hope that was useful to you. We'll be doing this again next week. Until then, everyone, take care and trade well.